makers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. In the US then, there have been big gains for the Democrats after Zohran Mamdani won New York's mayoral election, beating former Governor Andrew Cuomo and Republican Curtis Sliwa. During his victory speech, Mamdani challenged President Donald Trump, saying the city is helping dismantle the very conditions that gave him power, while Andrew Cuomo addressed a booing crowd, calling the Democratic win their night.
If anyone can show a nation betrayed by Donald Trump how to defeat him, it is the city that gave rise to him. This is not only how we stop Trump, it's how we stop the next one. So, Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up.
Well, Bloomberg's Mark Perry has been watching all of this for us and joins us with the details, with the context. Mark, it is an historic win, certainly from Mamdani, but also victories for the Democrats in New Jersey, Virginia as well, and some down-ballot races, as well as the redistricting effort over in California. So significant for the Democrats finding and refinding their footing. On New York, on Mamdani, how idiosyncratic is this? What led to this historic victory in terms of the centre of global capitalism?
What a shift for New York, and also a shift potentially for the country as well, for the Democrats, their messaging. He lured in a younger electorate, hungry for change. His whole platform was about the affordability of the city. It's expensive to live in New York. Not everyone is a banker, and that had a massive impact on the electorate.
What are the challenges ahead from it? I mean, the promises that Mamdani made are significant in terms of lower food prices, government or at least state-controlled or at least New York City-controlled groceries, free prices or no cost on using the bus system, caps on rent. I mean, it's an expensive menu that Mamdani has drawn up. Can he realistically deliver?
Policy strategy is one thing, delivering is another. The challenges are huge. Also, this idea of taxing the wealthy, that won't go down very well with New Yorkers. He's got to coalition build. He's got to build bridges with the right people, with Wall Street. Bill Ackman last night tweeted, "I'm there for you. I will offer you help." So the potential is there to achieve some kind of working, relationship between all parties.
How much champagne popping do you think there is going on amongst the Democrats today on the back of the victories, not just in New York, but as I mentioned, in New Jersey, in Virginia, the California story as well, and down ballot? Or does it demonstrate that there are real splits amongst the Democratic Party that they need to resolve before the midterms?
I would imagine quietly maybe there are some bubbles, but I think they are taking this as a re-energizing moment for the party, and they need to move forward with this in the next year with the midterms coming up. And I think the messaging here will be the cost of living crisis, which is gripping the country and the general population, and they'll definitely work that into their own strategy.
OK, Mark Perrier, thank you very much indeed on a significant 24 hours in terms of the elections and the voting in the US. Now to the tech story as well, because from a markets perspective, that's where all the focus was yesterday and largely continues today as well. AMD, the main contender to NVIDIA in the AI chip market, of course, failing to impress investors with its latest revenue forecast. AMD joining the global sell-off in semiconductor stocks, called lower right now by a little over 3%. Concerns over lofty valuations. We're joined now by Matt Bloxham, senior tech analyst for Bloomberg Intelligence, who's been passing the numbers for AMD and the broader read across. On AMD then, Matt, underwhelming despite the fact that they beat, nominally at least, on their most recent earnings.
Yeah, I think in isolation, the results they reported were a bit ahead of expectations. I think the themes were pretty familiar as expected, so most of the momentum being driven by their kind of core PC and server business, but seeing some growth also in the kind of more data center AI accelerator area. It's obviously the kind of big growth opportunity for them. Can they take share from NVIDIA over the midterm? And if you look at the kind of forward guide, again, it was a bit ahead of consensus expectations on the revenue growth, margin in line. So I think this is kind of really, about those kind of lofty valuations seen across the market. And if you think about the issue that's really getting people excited about AMD, and certainly recently in terms of the share price, it is this midterm opportunity to take share from NVIDIA in AI accelerators. And I don't think that's going to really start to kick in properly, maybe until the back end of next year when, for example, things like the OpenAI contract starts to kind of really build momentum. And if you look at the midterm on consensus, it has a very significant increase in revenue baked into the numbers already. So, the expectations are already pretty high.
Matt, how much of a knock do you think yesterday's moves have been to that theme around the AI momentum trade, around the tech trade, given the market cap moves that we saw, particularly for the semiconductor makers, the chip makers? Is this a kind of a one-off, or does it foretell maybe increased investor scrutiny of some of these names, given the spending that's come through and the valuations?
Yeah, I think there's enough going to be more scrutiny now, given where valuations are, and I think in the near term, at least, we're going to maybe lack some kind of real kind of hard, tangible fundamentals to kind of really justify where things have got to right now. It's all kind of baked on this midterm opportunity. So until we see more tangible signs of that really coming through, then I think the sector's going to be a little bit more open to the kind of vagaries of some of the more macro trends, things like interest rates and everything else. So, we're in a bit of a pause, I think, right now, waiting for those kind of the next steps of that kind of midterm story to kind of play out in black and white in numbers.
OK, Matt Bloxham, Senior Tech Analyst for Bloomberg Intelligence. Matt, thank you very much indeed for breaking those numbers down for us and framing them as well in terms of the broader context. Third quarter earnings then have been beating analyst estimates more broadly. EPS beats have been above average in both the US and Europe, while sales beats remain elevated in the US. Emmanuel Kopp, head of European equity strategy at Barclays, joins me now. Emmanuel, always great to get your insights on these markets, particularly on a day that we saw, of course, at least shortly after a significant sell-off stateside. How do you frame what we saw yesterday in terms of the market moves? Is this a kind of a rational and a healthy pullback that we saw, or the start of a more pronounced sell-off?
Morning, Tom. We think it's very healthy and almost a welcome development to have finally a little bit of raising room for this market. There was no more than 3% correction since Liberation Day, so the market has gone up in a straight line, and there is a lot of frothiness in the market. Valuation in tech, positioning, some retail exuberance as well, and I think we are starting to scratch our head to find more upside into next year. So a bit of a pullback at this time of the year, I think, is a welcome development. I think this is going to be short-lived. I think a lot of people have been missing the train in the last few months and will use any dip to buy and to add to equities. We are trying to keep it simple. There is a lot of things going on in this market around the world, but we are trying to keep it simple. We have, three key drivers of the market. The big one is the Fed. The Fed is still a support to the market. We think they're going to cut rate in December again. The QT is coming to an end. So the Fed put is underpinning this bull market to some extent. Number two, earnings, which is what you said earlier. Earnings have been very strong in Q3. Earnings revisions are basically moving higher, and that's a key backstop to the equity market. Thirdly, we think growth globally is getting better. We just got European PMI this morning, much better across the board. The point is that if you have fiscal and monetary stimulus coming together, that should provide some support to the economy and help the economy to rebound into next year. Ex-AI, a lot of things are quite depressed. CapEx, consumer spending, and all these things should get some support for monetary and fiscal stimulus into next year.
Can I just put a pin in the monetary policy piece? Because you made that statement that you do think they cut in December. Jay Powell causing some concern among some in his language, suggesting that December is not a foregone conclusion. First of all, what gives you the confidence they go in December? Is it the labour market? Secondly, if they don't go in December, how much of a risk is that to the markets?
Look, I think Jay Powell had to manage expectations. But we think the labor market is softening. And look, we don't have too many data to prove it because, with the shutdown now being the longest in history, the data is very scarce. But we think the labor market is softening. We got a pretty decent inflation report 2 weeks ago. CPI is coming down. And, the Fed is still in restrictive policy, level, right? So we have a pretty high conviction that they will cut. And the market, by the way, is still pricing a 70% chance of a cut in December. Obviously, the wording will be quite important because, there's a question about how much they will cut next year.
Yeah.
If ultimately growth is recovering and the labor market is, holding up, are we going to see 3 or 4 more cuts next year? We don't think so. We have 2 more cuts for next year. But look, we still believe there is a path ahead for the Fed to be easing. And bear in mind that there's a lot of, talks about the new Fed leadership as well and the Fed independence, so they will probably lean to the side of caution.
Emmanuel, we're going to ask for your patience. You talked about earnings, and we have the CEO of Novo Nordisk standing by for a conversation with Guy Johnson. We want to go there first, and then we'll come back to you. So we'll wait for your analysis as well on that. Emmanuel, stand by for a conversation on the earnings. But let's cross over right now to Guy Johnson. Novo Nordisk then cutting its forecast for the 4th time this year after disappointing sales of its blockbuster drugs, Wegovy and Ozempic. The stock is actually up 1.3% in the session. It underscores the challenges, of course, facing its new chief executive, Bloomberg's Guy Johnson, is at the Novo Nordisk headquarters near Copenhagen. Guy.
Tom, thanks very much indeed. Thanks for coming to us early. We really appreciate it. It is one of the big stories of the morning. What is happening with Novo is fascinating, as you say. Company coming out this morning, cutting revenue, missing on a number of metrics. But look at the share price. Last time I checked, and it was just up on the screen just a moment ago, up by, 1 and a bit %. Does that signal maybe that the market believes that this quarter, this Q3, is the bottom? Let's ask Mike Doustdar. He is the CEO of this business now. Great to see you, Mike. Thanks for spending some time with us this morning. Is that the right interpretation? Is this the kind of the bottom? Is the glass half full from here after being half empty for so long? Do things get better from here?
Well, what I can tell you is that the first 9 months of the year, 15% sales growth and 10% profit growth is not so bad at all compared to our peers. But I think that when you look at it quarter by quarter, there has been a headwind and bringing the quarterly growth rates lower.
Okay.
If you project our numbers for the full year, actually you see that quarter 4 should be in negative territory. So that you see mathematically.
So this isn't the low point. The low point is still to come, but things get better from there?
There's for sure a headwind against us.
Yeah.
Having said this, we are in a business of marathons and not sprints.
Okay.
So there is huge amount of unmet need with many patients still not on our medications or not on any medications. And I look incredibly forward, of course, as we go forward, taking over this new job, making sure that we expand the market and get to those people.
You've been in the job for 91 days. You haven't let the grass grow under your feet. You're already talking about cost cuts. You will talk about it in a minute. You've launched a big M&A deal. Is this the new Novo? Is this a more dynamic, aggressive Novo Nordisk under your tenure?
The success we have had with obesity has meant that a lot of companies, pretty much all pharma companies out there, has gotten excited about what we do. So that is good from a patient's perspective.
Okay.
More players will come in.
What about a shareholder perspective?
But at the same time, we have to make sure we can outperform the competition from a shareholder perspective. So my job is to really make sure that we are ready for the headwind that we clearly are seeing coming towards us.
When are you going to match Eli Lilly in terms of performance? They had results a few days ago. They were knockout. When are you going to be able to match that kind of performance? You talk about a kind of a performance culture here.
Again, my job is to put the patient in the center of what I do and not necessarily just my competitor. We watch them. We take all of our competitors seriously. But there are hundreds of millions of people out there that are suffering from diabetes and obesity that no one is right now addressing. My job is to sustainably lead ourselves towards that aim.
How does Metsera help you do that?
Metsera has some of the best complementary assets to our own phenomenal pipeline. So when the ambition is in billions and not millions, you need basically all the great assets to get.
Great assets, but complementary. So why do you need complementary assets? Because you've got all these products. Why do you need to go and buy this business?
Because obesity and diabetes is not a single disease. It's an individual disease. You basically have different preferences. Take a look at the great Wegovy pill we're about to launch in US. Well, that's for people that don't like injection.
Sure.
They would like to lose weight, but they don't have a viable offering from us or the competitors.
You've got very similar products. And the question that I've just listened to a lot of analysts, talked to a lot of analysts, and the question they keep coming up with is, does this seem to signal maybe that you don't believe in the current Novo portfolio?
Absolutely not. Absolutely not. We are in a situation where every single patient has a different preference.
Right.
And we need to have the product offering that matches that.
They've got a monthly, you've got a weekly. Is that really the big difference?
Well, we saw that the weekly was a big difference to the daily one.
Okay.
So I would say for
monthly does make a difference?
For some, probably yes. For some, probably yes. Others will prefer to have a weekly product.
Is it more important that Pfizer doesn't buy it than Novo does buy it? Because that's another thing I hear as well.
My focus is on Novo Nordisk. Right. The way I see this is there's a company for sale, there's a buyer and a seller.
Yep.
And basically, one of the buyers doesn't like the price, and the other one does.
Okay.
My job is to make sure I look at what we need, and we would very much benefit from Metsera's assets, and we put the right price up there our price.
What's the right price? Could you go higher?
The current price in the market has been, addressed by Metsera's shareholders, and then we'll see where this goes.
Do you think Pfizer comes back?
I have no idea.
You have no idea, but if they do, will you go higher? How important is this asset?
I'm not going to make an announcement today on how I'm going to treat this.
How do you make sure you don't overpay for this asset?
By having actually looked very deeply into the data. As I mentioned, we know this company very well. We have seen this company for a long time, and we like what we have seen.
Okay. You're going to London, I think, tomorrow, right?
Possibly.
Okay. Are you going to the States after that?
I'm looking at the whole world, so I'm going to go everywhere.
So the rumor is that basically you're going to be in the White House on Thursday, and you're going to tell me that the deal's not done with the Trump administration on pricing, and I'm going to ask you, how close are you, therefore, to a deal?
I'm going to say that we are very much aligned with the purpose of the negotiations and the discussions we're having with the administration. We both would like to provide access to many more patients out there, affordable access.
Are you close?
So we are discussing very closely.
Okay. Okay, closely. One of the parts of the discussion, I'm assuming, has to be about what is happening with copycats, about the companies that are producing drugs that were allowed when there were shortages, but now are using loopholes to maybe continue to produce products. And I'm wondering whether or not a deal with the White House would include maybe closing some of those loopholes. What are the compounders doing in terms of your business right now?
What I can tell you is that we have been quite surprised on how the compounding has gotten started.
Right.
Taking an API, the raw ingredient of a medication that has not been approved by FDA, and injecting that into human beings is something very far from what we have been educated in this industry. So we will continue to lobby for the administration
with the White House?
What have you, that this is simply not right. I will not get into the details of the deal, as you could imagine.
We will wait and see what the deal looks like later this week. Mike, great to see you. Thank you very much indeed for stopping by to see us. We really appreciate it. And thank you for inviting us to the headquarters. We really appreciate that as well. Mike Doustdar, the CEO of Novo Nordisk. Lots to discuss, lots of things happening at this company. It's going to be really interesting to see what the fourth quarter looks like and then into the first, second quarters of next year. Where does this journey take this company? Are we going to see more cost cuts? Are we going to see more M&A? Key questions that I think still need to be answered. Tom, thank you for the time. Back to you in London.
Guy, great conversation. Thank you very much indeed. The stock currently up 1.6% on Novo Nordisk. Guy Johnson on the ground, of course, with the CEO of Novo Nordisk. We're going to get more, by the way, on a broader sense in terms of how the earnings story is timing in to the market moves that we're seeing into the future as well. With Emmanuel from Barclays. More insights from Emmanuel coming up in the next couple of minutes. Stay with us. This is Bloomberg. Welcome back to the Pulse. Third quarter earnings then have been beating analyst estimates. We just heard, of course, from the Novo Nordisk CEO warning of headwinds for that company. Let's bring back Emmanuel, head of European equity strategy at Barclays, still with us. What have you taken from the earnings season so far with that lens on Europe and the ability of European corporates to navigate that challenged global environment, whether it's tariffs or the slowdown in China?
Look, I think corporate resilience is our main takeaway. You have a lot of policy uncertainty, macro uncertainty, and yet earnings are delivering much better than expected. So definitely we had significant cut in estimate helping these beats. But I think that the tone of the company's transcript is quite positive. We are doing this quarterly analysis of all the transcripts. companies are still pretty positive into next year. Some of the tariff uncertainty is fading. Now we know what to expect. We know what the tariff rate will be. So that's helping the investment, the planning ahead. We're also starting to see the kind of fading headwind from the currency. The strong euro has been a big headwind for a lot of exporters in Europe, which has the bulk of these downgrades. And now more flattish or stable currencies helping as well. But I think we are starting to see some green shot, like consumer, for example. A lot of consumer-exposed companies told us, the consumer was a bit better in Q3. So that's
the discount between European stocks versus their US counterparts remains. How is that tying into fund flows or flows into European markets? How do you see that story evolve?
I mean, there was a big, buy Europe mantra at the start of the year, or sell America, which has completely reversed in the last couple of months. I think the bar to clear was much lower for Europe. And we are seeing that in the last couple of days, where the kind of selling pressure is quite significant in the US and the very crowded AI space. Europe is less hot, less speculative, and, maybe the valuation give a bit more cushion to the market. So we've seen stocks reacting pretty well to the good earnings in Europe, which was not the case in the US.
Before we let you go, the Bank of England decision tomorrow, and you have a counter-consensus view that the BOE actually cuts on Thursday.
Yeah, look, our economists have a very good track record on that. So I will, stick to the view. We are looking for a cut tomorrow. We think there's enough evidence of disinflation in the UK, softening labour market for the BOE to cut even before the budget. Obviously, the key for UK market, UK assets will be on the 26th of November. Do we see fiscal credibility coming back? Do we see a well-behaved bond market, which could be a silver lining for the UK market, and the FTSE 250 is a more domestic part of the UK market as well?
OK, so the FTSE 250 arguably is the space to watch on the equities story when it comes to November the 26th. You expect that cut from the BOE, and we'll see, of course, how that filters across to a gilt market that, of course, has performed pretty well in recent weeks, the rally in the gilt market. Emmanuel, Head of European Equity Strategy at Barclays, thank you very much indeed. Coming up on the UK then, the Chancellor is told she will need to run a primary surplus to keep the country's debt under control. We're going to look ahead to what will be, of course, a difficult budget. That is coming up. This is Bloomberg. Good morning, welcome to the Pulse. I'm Tom McKenzie in London. These are your top stories. Zohran Mamdani makes history as he becomes the youngest person in 100 years to be elected Mayor of New York. Global stocks extend their losses on continuing concerns over high-tech valuations. AMD and Supermicro are the latest earnings to underwhelm. Plus, Novo Nordisk trims its forecast for the fourth time this year. The new CEO telling Bloomberg the firm is in very close discussions with the White House on drug pricing. Let's return to the US elections then, and the bigger implications following Zohran Mamdani's historic win in the New York mayoral race. Bloomberg's analyst Marty Schenker joins me now. Marty, what is your take, given your rich experience, of course, in covering US politics, in terms of the significance, the historic significance of Mamdani's victory and sizable victory in New York, and what it means for President Trump and the Republicans?
Yeah, well, I do think for the Democrats it certainly points up the significant separation between the very liberal part of the party, example Mamdani, who was backed by Bernie Sanders, among others, and the two governors who won in Virginia and in New Jersey, who are much more moderate. And yet, together, they certainly did provide a lot of momentum to the Democrats, and not a great result for Donald Trump.
What is the challenge for Mamdani now that he's won power? He's not in office quite yet. There's a bit of time before he takes the reins of power. But the promises that he's made on the campaign trail, that there are question marks as to his ability to actually implement them, and the work he's going to have to do with the governor of the state.
True. He does have Governor Hochul's support, and she has already said she would love to see if she can figure out a way to pay for free child care. But really, when you get down to it, Mamdani's, the cliche is, now comes the hard part. And while these proposals are very popular, and he was able to take advantage of that. Paying for them is really another question, and he doesn't have the ability to do that on his own. He has to enlist Albany, the state legislature, and the governor to get that done.
Okay, so we'll be watching that. So broadly, success for the Democrats, and they've got the kind of wind in their sails right now.
They do.
But at a time, of course, when we mark today the longest shutdown in U.S. history, 36 straight days. Are we seeing any signs that shutdown is going to be ending? And is there more pressure on the Republicans to find a solution?
Yeah, there's been a lot of speculation and chatter that the Democrats were holding back on having any kind of serious negotiation on reopening the government until after the election. Well, the election is over, and we'll see if there's any movement. There have been discussions in the background. The question really is, will Donald Trump give the Democrats any kind of assurance that they can trust to get discussions going and get the government back open?
Marta Schenker, thank you very much indeed. Bloomberg's editor-at-large, with the implications of the voting that's come through, of course, out of the United States. Not just New York, but New Jersey, Virginia, the changes around California, and some down-ballot races as well, victories for the Democrats. What it means for the Republicans as we look at the first day where we've had a historic shutdown in terms of the length, record length of a shutdown in the US, 36 straight days. Now, to the UK. A think tank here has said the UK Chancellor will need to run a primary budget surplus to get a grip on what they describe as the unsustainable debt trajectory. The National Institute of Economic and Social Research says Rachel Reeves will need an extra £50 billion to guard against future fiscal shocks. The Chancellor will deliver her budget, of course, in 3 weeks' time, November 26th. With us for a view on the budget, but also the BOE, which makes its decision tomorrow, is Modupe Adegbembo, economist at Jefferies. Modupe, always great to get your insights. I want to get your views, of course, on the budget, but let's start with the BOE. We were just hearing from Emmanuel at Barclays. Him and the team at Barclays, they expect, actually, the BOE to go with a cut tomorrow. Where do you stand on that?
So I think the Bank of England is likely to remain on hold tomorrow, but I do think it's quite a finely balanced decision. You can see quite clearly that we've seen some easing in important areas like food prices, wages continue to come down, and I do think that the Bank of England doves will have a lot to go in with in this meeting. But at the same time, we still have the uncertainty around the budget, and I think that's a big thing there. And we can't forget that inflation is running at double the Bank of England's target. So I think it's hard for them to be in a rush to cut rates at this meeting, but I do agree it will be quite finely balanced.
So given those factors and the armoury for the doves and the dry powder they bring to this discussion, you don't think they go tomorrow. But if they don't go tomorrow, given some of those factors that you've addressed, are we looking at a more aggressive rate-cutting cycle from the BOE than maybe some are factoring into 2026?
I think we are. So I would say after the meeting in November, I do think the Bank of England are likely to lower rates in December. So I do think they'll lower rates this year. And I think going into 2026, when you take the factors that I talked about, so food price inflation, wages, the cooling labour market, but you also have to think about the fiscal outlook as well. I think that's one thing markets aren't necessarily considering in their overall rate path, that when we talk about the potential fiscal tightening that Rachel Reeves is likely to announce on the 26th of November, that is going to weigh on the UK economy, and that is going to make growth slower than markets are currently anticipating. And so I think the Bank of England can lower rates to around 3%. I think markets are close to 3.4%, 3.5%, so I think they can come a lot lower than that.
They can come down to 3%, so there's further to go for the gilt rally then?
Absolutely.
At the front end, is that where you'd be focused, on the 2-year? So
I think on the front end, especially because when you look towards the longer end of the gilt curve, I still see some of these uncertainties around fiscal. I'm not confident around the fiscal trajectory, and so I think there are risks there, but the front end, kind of around the 5-year point in particular, is where we prefer on the gilt side.
The Chancellor has obviously been warming us up for tax increases November 26th. Where do you think those tax increases land? What are you starting to factor in? She has a menu of choices, unenviable choices, many would say. What for you is top of mind?
Yeah, so I think top of mind, especially following the speech we saw yesterday, you have to be considering those broad tax increases. So people were talking about income tax increases. Maybe they were saying higher or additional, but I think you have to really look at the basic rate of income tax after what she said yesterday and what she was kind of leading the public towards. I think it's quite interesting. The Resolution Foundation talked a few weeks ago about the potential of increasing income tax, but also reducing national insurance. I think that's something that the Chancellor may be looking at, especially when she's talked about her pledges around, I guess, not increasing taxes on working people. So it's still difficult for the Chancellor because you will be increasing taxes, but there might be a bit more leeway for her to say, OK, we've tried to reduce the amount that working people are under pressure here. So that's something I think is interesting. But there'll be a lot of tax rises on the menu. There's a lot for the Chancellor to do. And
we know that the fiscal headroom that she's given herself in this Parliament so far has been minimal, £9 billion or so. She's going to have to, and she suggested she will go further on that. What are the markets looking for? What would be a comfort level in terms of that fiscal headroom?
So I think if you look historically, since 2010, Chancellors have left themselves on average around £26 billion of headroom. I think markets may allow her to do something slightly less, but I think she really needs to increase the headroom to around 20 billion. I think that will be where the comfort point is, because
a minimum of 20 billion.
I think a minimum of 20 billion. And I think when you look historically, around 25 billion has been what other chancellors have done. So she may even want to target that. I think that would be a sensible place to start.
The productivity is back in focus with the OBR adjustments expected. Frame for us where the UK sits in terms of our productivity challenges and whether or not AI can solve that for us.
I think it's interesting because when you look at the UK and you look at other Western European countries, I think we are having a similar issue in terms of the fact that productivity in the UK has lagged, and that has impacted public finances in a very, very important way. I would say in some senses the UK has done slightly worse. When you look at public sector productivity in particular, that has been negative literally since the pandemic, and that means that public sector workers are producing less. Including the NHS and other really, really important areas for the economy. So that means that a lot needs to be done to improve the productivity in those areas. And I agree that AI and technology could be very, very important. They could be a boon for productivity. But the issue is it's uncertain. And for the OBR, we faced years of higher productivity forecasts. So, of course, AI could mean that actually productivity is in line with their historic forecasts, but I don't think that they can really lean on that.
OK, Modupe, thank you very much indeed on views on the BOE, which, of course, makes that decision tomorrow, and looking ahead to the budget, of course, that crucial event for the Chancellor and the UK government. Modupe Adegbembo, economist at Jefferies, with that analysis. To the corporate story and the earnings story around BMW now, the auto sector, one of the best performing sectors across Europe so far. BMW's quarterly profit margin landing near the low end of guidance, hit by tariffs and fierce competition from China. Let's bring in Bloomberg's chief Europe economist correspondent now, Oliver Crook. Ollie, what caught your eye? You follow this company very closely. What caught your eye from BMW?
Yeah, I think for everybody in the auto market, we're trying to figure out where the bottom is here for the sector, more broadly speaking, certainly for these European companies. And we look to BMW's earnings to try to get a little bit of hint as to whether or not we have arrived there. So you look at their sort of year-to-date sales overall. They increased about 2.5% a year-to-date through the month of September. That's what we saw from BMW into their numbers. When you dig into the regions, and this is obviously, as you know, Tom, very, very key. The United States, they've done extremely well, up about 10%. Europe, up about 9%. So the question is, how do you get to a 2.5% increase with those really, really strong markets? It's in the conspicuous absence from the China number, which they don't build out there, which you have to imagine was extremely, extremely poor in order to drag down the year-to-date sales down to that 2.5% figure. And that is the story that we have continued to hear from BMW and these European auto markets more broadly, is that China market is just not recovering in the way that they anticipate, in part because of demand, in part because of competition. The margin also getting squeezed for BMW between 5 and 6%. That is partially a tariff story. It lost about 1.8 percentage points of its margins due to the tariffs. But looking ahead into the things that really are going to drive this story for BMW in the months to come, there are all these questions about, obviously, tariff policy, about semiconductor access, demand in China, all those sorts of things. But I do want to focus on one of the tailwinds for BMW, which is their new series of cars. You will know this, Tom. You actually one of the first people who probably saw one of these cars, the Neue Klasse, the iX3, which will be on roads beginning of next year. And they're saying in this earnings release that, in fact, the demand, particularly in Europe, has far exceeded expectation. So a little tailwind there for BMW with these new cars hitting the road in the beginning of next year.
The Neue Klasse, yeah, we're seeing pictures of that. I didn't see it was covered in one of those, kind of protective tape coverings. So I was there with the vehicle, but they wouldn't take that off for intellectual property reasons and concerns about snooping. Hopefully not from me, but maybe from others. Ollie, what does this tell us? Where does this leave then the auto sector? You've been following this story for at least the last couple of years. As you look in with your lens to 2026, where does Europe's auto sector stand?
I think that the road for the auto sector is really shaped right now in a very sort of, sort of question mark, basically. But I've taken a little bit of time here to try to find a more positive and optimistic view with some of the analysts that we're hearing. And we're hearing more and more positivity, namely from Bloomberg Intelligence, that's come out and said that basically 2025 for the auto sector was really the trough. What they are pointing to is new EV subsidies, particularly in Germany. That'll be to the tune of about 3 billion euros. That is going to be meaningful. But there's been all these ongoing cost-cutting programs. That all this stuff should support the recovery, but it is a very fragile recovery. And I think that everyone who observes the auto sector is very aware of that fact. When you look at the stock moves for many of these car companies this year, basically nobody had a very good year in 2025. Everyone is either flat or down aggressively in the case of Stellantis, which lost about 30% of its market value this year. And I think it's interesting to look up and sort of tally up these market values for all of these companies. You know, BYD is now worth $120 billion. You look at Stellantis, it's worth $25 billion. You've seen a massive reversal over the last couple of years. But again, a lot sort of sits on the outlook, a lot sits on these semiconductors, all of these debates that are going on with China, and of course that critical demand in China, which we still not heard the final word on.
OK, Bloomberg's chief Europe correspondent Oliver Crook. Ollie, thank you very much indeed on the auto sector, BMW, and looking ahead to 2026. Switching focus to healthcare, and particularly some of the components that go into healthcare, like MRI scanners and such. Siemens Healthineers recovering some of its losses after its steepest intraday fall since it began trading in 2018. As you can see, the stock is still down 8.7%. Speaking earlier to me on Daybreak Europe, the company's CFO told me he expects the impact from tariffs to roughly double to 400 million euros in fiscal 2026.
We had a headwind of about 200 million euros in fiscal year 2025, and that is primarily affecting two businesses which have a lot of value add in Europe and sell a lot of good stuff in the United States. And we expect for this fiscal year, our fiscal year 2026, roughly double the amount, 400 million.
Meanwhile, shares in Vestas have surged after it announced a new share buyback programme worth up to 150 million euros. Look at that pop, more than 13%. The Danish wind turbine maker reported a more than 60% rise in onshore orders compared with a year ago. But the chief executive has issued a word of caution, saying the current environment is creating unprecedented challenges. Now, a broader look on the shift around energy. EU member states have clinched a preliminary deal to reduce emissions by 90% through 2040, compared with 1990 levels. The breakthrough comes ahead of the Leaders' Summit at COP30 in Brazil later this week. Let's cross over to Vonnie Quinn, who is in Sao Paulo. Vonnie, how significant is this, or is it just, frankly, too little too late, given that target around 1.5% that we seem almost inevitably close to missing?
Exactly, Tom. No, it is pretty significant. The delegates that we spoke to yesterday, particularly those from Europe, were waiting all day for some news. And as we know, that did come after 15 hours of negotiations. And ministers are meeting now to conclude the deal. So it does give some momentum going into this COP30. It also shows that perseverance and negotiation can work. And that was one of the messages that the president of COP30, Andre Correa de Lago, told me when we chatted the other day. It is obviously the details matter. You said the 90% emissions from 1990 levels by 2035, but also the carbon markets, that the ETS2 getting underway by 2031. That's a very important component of this. And it also paves the way for the EU to submit an NDC, a nationally determined contribution, which it hadn't done. It had missed all the deadlines. So I think there are a lot of lessons in here for perhaps the rest of the world, and maybe in particular the United States, which, as we know, has been retreating. There are no senior US officials coming this year, and it is casting a little bit of a pall over the proceedings. I did ask the president about that as well, and here's what he had to say.
It's obviously very unfortunate that the US is not in. But as many actors in the US, very important people in the US say, it's the American government that is not present. It's not the American economy. And so if you take, for instance, the governors that continue to follow the Paris Accord, these governors represent around 60% of the American GDP. So US will be present through through local politicians, governors, but also through business, science, universities, etc. So the US is at the COP, but we would have preferred if the American government was also there.
So as you can see, really trying to put a positive spin on things there, Tom, and there is more positive news. So for the first time ever, the UN is projecting that we will see an emissions decline of 10%, and that is good, but that decline would have to be 46% by 2035 in order to keep on some kind of track by the end of the century.
Meanwhile, flows of capital continue into renewable energy, Bonnie, which is interesting. I mean, particularly given what you've been framing for us in terms of the lack of participation of the US government, the Trump administration, of course, the gutting of the IRA, and yet the fund flows continue.
Yeah, absolutely. And you know this, Tom, from talking to tech companies. The primary argument now is that it's continuing because the economics work, right? It's a good investment for the most part. We spoke to many multilateral development banks that say, look, that is our argument when we're bringing on insurers, when we're bringing on pension funds and so on. Many of these innovations actually go on to be able to get scaled and to actually make money. Now, in terms of dollar amounts, we're up to $10 trillion. It sounds like a fortune. $2.1 trillion of that was last year alone. So we're ramping up very quickly, but bear in mind we spent $1.4 trillion last year just cleaning up from energy damage, energy disasters, extreme weather and so on, floods, droughts, deforestation. So a lot of money goes into it, and that money could be saved potentially by some of this investment. Now, Bloomberg New Energy Finance is predicting that that investment would have to ramp up significantly if we were to try to get to net zero by 2050 or even by the end of the century. In fact, it would have to reach something like $6 trillion a year in the next 10 to 15 years in order for that to happen. But from those that I spoke to, the delegates and the investors and the pension fund managers that are here and that will be in Rio and potentially Belém for a day or two at least, that money is out there and it can be tapped as long as the economies work.
Bonnie Quinn, thank you very much indeed. On the ground for us in Sao Paulo at COP30, of course. Bonnie, thank you. Coming up, I'm going to switch focus. I'm going to be joined by Alastair King as he prepares to step down as the Lord Mayor of London at the end of the week. We'll reflect on his year in the post and maybe get his views as well on the upcoming budget, what the City of London needs. Stay with us. This is Bloomberg. Welcome back to the Pulse. Now, Alastair King finishes his year-long term as Lord Mayor of London this week. The end of his tenure comes less than 3 weeks, of course, before the UK's autumn budget, November the 26th, which could have significant implications for the City of London. Alastair King is with me now for his last interview on Bloomberg TV as Lord Mayor, but hopefully not your last interview on Bloomberg TV indefinitely. Alastair, thank you for your time. As you look back then on your year of service, what stands out to you in terms of what you would notch up as achievements to support this great City of London?
I'm very obviously sad to be leaving this remarkable post. It's a great honour to do it. And I think, though, that we've managed to get a few things done. I'm particularly pleased with the Mansion House Accord, which is where we managed to get 17 of the largest pension funds, responsible for about 90% of the defined contribution default universe, together in a room and to make a commitment to invest 10% of their default funds into alternative assets over the course of the next 4 years. Decent size. That's about £100 billion over the course of the next 4 years, investing into areas such as infrastructure, private equity, private debt, plus also early-stage companies. 50% of that will go into the United Kingdom and 50% into the rest of the world. I think that's a significant achievement of which I'm very proud.
What is top of your list? What should be top of the list on the in-tray of Susan Langley, who's taking over as the next mayor in City of London? What is the key priority?
I still think the priority that I had when I started still pertains, and that is we in the City of London, we've become a little bit too risk-averse. We are effectively, we had a wonderful reputation for many centuries for going around the world, banging on doors and doing remarkable things. And I just think we're still playing within ourselves, and therefore I think we've got to get back into that concept of jumping on planes, banging on doors.
Where does the UK Chancellor sit in that as we look ahead to the budget and question marks about tax increases? calls from some for a wealth tax. She suggested that's not going to happen, but broad-based tax increases do seem to be on the agenda. How much concern is there within the City of London about tax increases?
I think that there is concern, absolutely. I've spent a lot of time speaking with my colleagues in the city, and there is a concern that we've got to maintain a competitive nature for our taxation environment to allow wealth creation to take place here in the city. We do that really well when we're given the opportunity, given the platform. And I just think we've got to make sure that we preserve that remarkable creativity, and I think that taxation plays a key part in that.
How much of a hit would a bank surcharge be?
Well, we're absolutely against a bank surcharge. I think that's a retrograde step. So we've got to remember the fact, if you free up the banks, and allow them to finance businesses, businesses will do the government's job for them. They will create the growth. They're extremely good at doing that. That's exactly what they're there to do. And so, therefore, it's absolutely part of it. Banks investing into businesses, and businesses then creating jobs and creating growth. That's what we should be concentrating to do.
Are the non-dom tax changes still a drag, still a concern, or have most executives and high net worth individuals adjusted to that?
It's still a concern, something I've been advising government on. We have to get a change there. Particularly, I'm looking at can we decouple the inheritance tax element away from the non-dom configuration, because effectively that's the bit that's really upsetting some of the investors.
Do you think they're taking that on board? The Treasury?
I know we've said it to them, and also I know that they've listened. Let's see what happens on the 26th of November.
Exit taxes as well. And Nick Stronsky of Revolut has moved. Have relocated to the UAE?
I think you're mentioning some very apposite points. I think it comes under the heading of competitiveness. We've got to have a competitive tax system to make sure that we have wealth creation here in London. Without that, there are problems ahead.
I asked you when you were last around the desk with us about Reform UK and in terms of their efforts in trying to win over the city. How has that changed since I last spoke to you? Have they made more progress, Reform, in winning over city executives?
They have not been in touch with me so since you and I last spoke. I don't really see enormous around the city. I don't see many sort of much evidence of Reform paying attention to the city. But that might just be me. Perhaps I'm not on their list.
OK. Alastair King, thank you very much indeed. City of London Lord Mayor, of course, at least for the next couple of days after serving his one-year term. We wish you all the best in your next ventures, of course. Up next, we're coming up with Bloomberg Brief, checking in the markets for you, of course, after some of the nosebleed losses that we saw yesterday, particularly pronounced on the Nasdaq 100. US futures continuing lower by 0.1%. European stocks a little softer in the session, down 0.3%. The UK FTSE 100 is back in negative territory, down 10 points at 9,704. Stay with us for the brief. This is Bloomberg.